What is the purpose of life insurance? Who needs it? And how much should they have? What's the smartest way to shop for and qualify for it? We're getting into all that right now on Windfall Wednesday. We review basic principles to help the everyday person improve their finances. So like, subscribe, and let's get to it. The purpose of life insurance is income replacement, meaning you won't be able to replace you, but life insurance policies are designed to replace the income that your family relies on. For the full year 2021, the average total household income was just around $67,500. Your case may be lower or higher based on where you live, but just for example, if your income makes up half of that, it'd be around $33,750. Let's say your household has 4 people living off of 2 incomes. That's $67,500 split between 4 people, which gives you an average of $16,875 of income per person. If the worst happens, you die. Now you have $33,750 split between 3 people, or, in other words, $11,250 of income per person. So what happens to the house? What about ballet, karate lessons, and gymnastics? Your loss is devastating enough for your family. Why should they add struggle to their grief with the loss of your income? So who actually needs life insurance? Well, the first question you want to ask yourself is, who depends on my income? If anyone does, especially young children who don't yet work for incomes, I'd get the ball rolling, not now, but right now. Although I am going to show you how to properly shop for it, so it's okay if you want to watch the rest of this video first. If no one but you depends on your income, then probably not. Because if you die, then you've effectively lost your only dependent. On the flip side, life insurance does get more expensive as you age, because the older you are, the closer you are to dying. For this reason, many sales agents encourage people to purchase insurance years before they actually need it. There's an upside and a downside to doing this, so it's really up to you. Maybe something changes about your health which makes your insurance more expensive or disqualifies you from coverage altogether. But if you've been growing your stacks with us long enough, you also know that you could easily be investing your money or killing off debt instead. Getting life insurance 5 years before you need it will maybe save you $2 a month, and you could always be investing those premiums instead. So getting a life insurance policy early, if you anticipate needing one in the near future, isn't something that I would do, but isn't necessarily the worst idea. So how much life insurance is enough? How long do you need it for? And how do you find quality coverage? I'm showing you my best practices next, but first, if you plan on using this content to grow your stacks of cash, subscribe, then hit the bell so you never miss a video. Also, if you know anyone who can use what we talk about on this channel, feel free to share this video with them. So you've determined that having life insurance is a good idea. How much life insurance do you need? Most experts shoot for around 10 to 15 times your annual salary as a death benefit. Since life insurance benefits are sold in thousands, if you're making $33,750, then you'd want anywhere from $338,000 to $507,000 of life insurance coverage. So your family would receive a lump sum of money to be invested rather conservatively. A savvy advisor wouldn't put the entire lump sum into something too volatile like growth stocks, because the last thing your family needs is a market crash right when they need to pull money out. A stable rate of return should allow them to draw from the paid out benefit gradually so that it lasts for the next 15 to 20 years. How long do you need coverage for? Until the point when you expect to be self-insured. Let's say you built your investment portfolio to a few $1,000,000. Do you really need $500,000 life insurance policy that you have to pay for, the premiums of which you could be investing? Also, there is the theory of decreasing responsibility. So you're young, at least younger than you will be 30 years from now. Your kids may be young. Your mortgage may not be paid off. You may have other debts such as student loans, you have a lot of obligations. Your assets? You're probably not at your peak earning potential just yet. Your investments haven't had your entire career to grow. But if you're doing the right things, you ought to trend in the right direction. As time goes on, your kids age, and you train them to develop their own independence by adulthood. Your mortgage loan balance is decreasing, and hopefully paid off eventually. You've crushed your non-mortgage debt already, so you get to grow stacks more easily. You may not have the same number of obligations or the responsibility of dependent children. Congratulations. You've now outgrown the need for insurance. 20 or 30-year level term in life insurance, level meaning it doesn't increase in price every year, is what I used to offer when I was an in-home advisor. So how do you find quality coverage? Well, that starts with finding investment-grade insurance carriers. The term investment grade includes the highest rankings that insurance companies can get for their financial strength. Basically, their ability to pay the promised benefits of your life insurance policy. The best possible ratings are AAA, A++, and A, depending on the rating agency. But as long as it has an A at the beginning of the rating, I would be comfortable with the company's solvency. If you come across ratings starting with a B, or even worse, further down the alphabet, think school report card, I would not go with that carrier. The lower the rating, the more likely the insurance company is to default on its promised insurance benefits. Find and contact companies, get quotes for your desired coverage amount and length of policy, again, 20 or 30-year term. When you have 3 quotes for the same amount and length of coverage, that's when you select the one with the lowest insurance premium. Here's today's pro tip. Life insurance cost per thousand typically decreases at certain breakpoints, namely $250,000, $500,000, and $1 million. That means a $245,000 life insurance policy will more likely be more expensive than a $250,000 policy because $245,000 is shy of the threshold. So it really wouldn't hurt to quote $250,000, $500,000, and $1 million with each company that you quote with. And if somebody tries to tell you a $499,000 policy, feel free to fire them because you know they're just trying to gouge you for premium. Also, multiple breadwinners can have separate coverage on the same insurance policy. Burial-only coverage additions or riders for non-breadwinning members of the household should also be available. Getting multiple people on one policy saves on individual policy fees and is thus more cost-effective. Now, insurance isn't just something that you buy. It's something that you have to qualify for. The 3 main things that determine whether or not an insurance company will cover you, and for how much, are as follows. Age. Straightforward. The older you are in years, the more life insurance generally costs. If you're within 6 months of your next birthday, by the time you finalize coverage, you'll pay premium based on that age. Happy birthday. Health. You should probably be keeping up with this anyway, but in general, healthier people pay less for insurance as they are generally less likely to die earlier. Oftentimes, you will be required to either submit results from a recent medical physical and or go through one that is provided by the insurance carrier. So you can't fake it till you make it. Smoker status. If you thought smoking cigarettes was expensive before, you should see the difference between standard insurance rates and rates paid by tobacco users. A table rate smoker, someone with severe health issues due to smoking, may pay up to 500% more for their life insurance premium. You'll be asked questions such as, do you smoke? Have you consumed nicotine and or tobacco products? How often do you smoke? When was the last time you smoked? How many cigarettes a day do you smoke? And don't lie. Remember, you will be medically qualified or disqualified for coverage. Some of your hobbies can actually cause you to pay a bit more for life insurance, but probably not enough to prompt you to change your lifestyle. Skydiving, mountain climbing, and scuba diving are the common ones. You'll be asked if you do or plan to do any of these things, as well as maybe a few others. And again, it's not worth lying. If you died during any of these activities, you wouldn't want your family to be denied coverage. If you're shopping insurance online, you'll most likely see the absolute lowest rates reserved for professional athletes and supermodels only. They're not always realistic, so don't get excited before getting a few quotes. The rate that you end up paying will likely be more, even if it's not due to measured height and weight or tobacco use. I know we reviewed a heavier than usual topic today, so please comment with any questions, opinions, concerns, or objections. I'm happy to help in any way I can, and if you feel that anyone can get value from this video, like, subscribe, and most importantly, share.